Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Wednesday, March 19th. I missed yesterday because I accidentally had the mic off when recording, so sorry about that, but I will follow up on it. Yeah, especially because today's an exciting day. Not only is it the second day of the FOMC, but Jerome Powell, or J-Pow, will be speaking this afternoon, and so I expect that could result in some volatility in the markets. And so here, looking at the UVIX, which is the 2x long VIX futures ETF, which closed yesterday on Tuesday, March 18th, at a price of $37.19, being up nearly 5.5% on the day, but pulling back about 1% in the pre-market. And so what we can see here is that high from March 11th of $52.99. We have pulled back notably from there just, at the start of yesterday, pulled back about 33.69% there, and are currently right around 30% down. And so I suspect that during market hours, we will probably see this rise up a little bit more because, we don't really know what J-Pow is going to be saying. I suspect that he'll be dovish because of the recent pullback that we have seen in the stock market with the trade wars and or the tariff talk going on. I think that has caused some pullbacks, and as a result, I think that the markets will be rallying following the dovish talk coming from J-Pow. But, of course, I could be wrong. And so what I would expect is, let's see, the high from yesterday, the 18th, was 38.29. Maybe we get a bounce around there, maybe get up to 40. But after the market closes, I suspect that we will be seeing further downside, but perhaps not putting in new lows until tomorrow. We will have to see. But yeah, looking over here at the 10-minute time frame, we can see that yesterday did see a pretty big move up at the start of the day. And actually, since I didn't do this yesterday, since it was on mute, we did actually have the same kind of move on Monday, but it was actually to the downside. So a big move to the downside at the start of the day, Monday. Fade lower, kind of holding those lows throughout a couple of days ago after hours and into the pre-market from yesterday. Then that big green candle up, holding those highs throughout the day. A little bit of a pullback, but then a move up into the close, holding those highs. But it looks like a little bit of a pullback starting out with the pre-market trading, which is currently at 36.76. So, longer term, so not just the next couple days, I do feel like the UVIX will be heading towards around $32, perhaps getting back to 30. I think this would be kind of a reaccumulation zone before we maybe start to see another rally like this. But I don't think it's going to be as big. Over here we saw, about a 100%, over 100% move to the upside. I think that if we do pull down to, let's say 30 is the low, I think that we could be seeing maybe a 40-50% move to the upside to test that light blue downtrending line, which does represent the top of this parallel channel that you can see here based on these 3 pivot points highlighted there. But anyways, let's flip over to the VIX. This is, of course, the Market Volatility Index, which closed yesterday at a price of $21.70, being up 5.8% on the day. So didn't really, reclaim all of what was lost on Monday, the 17th. We saw this big red candle coming down of 5.79%. So effectively, percentage-wise, we did go up that same percentage, but we are still inside this red bar here, and it does look like we've got this light blue uptrending level here that had acted as support over here, a little bit of resistance, and then traded above it over here. That might be acting as resistance again, also with this orange line here at 23.76. which was the high from September 6th. So that could definitely be acting as resistance if we do bounce up higher today during market hours. But just like the UVIX, I do suspect that this will be rolling over if Jerome Powell is to be speaking in a dovish manner this afternoon. And so I should note that yesterday's high was 22.57, so maybe we get up to there, maybe 23, right around there. And the highs from the 17th was 22.95. So yeah, maybe we see a bounce and then a rollover, maybe come down to test this 786 here at 17.91 or right around $18, getting back below 20. I think that we could be seeing that happen. And one thing I didn't mention about the UVIX is that, let's see, as price has been coming down, in the UVIX, volume has been going up a little bit. And then with that green candle move yesterday, volume was not as high as it was on Monday. So on Monday, 6.12 million shares traded versus 4.4 million traded yesterday on Tuesday. So that suggests there aren't enough buyers to really be pushing this higher. And also, if we do look at the MACD down there, it has been green for a while as we were trading higher. Does look like following yesterday's trading, it has flipped to be red or flipped to be negative. And we can actually see that in the VIX a little bit clear. We've seen 2 days in the red. So I do suspect that this will be going lower. And with that being said, that means that the SPY, which is the S&P 500 tracking ETF, which did close yesterday on Tuesday, March 18th at a price of $561.02, being down about 1% on the day and bouncing about 0.25% so far in the pre-market. And so, like I was saying about the VIX, that I think that the SPY will then be moving higher. So I talked about this kind of extensively in yesterday's video. It was a shorter one, but it was on mute. Did talk about, this confluence of levels, and that would be getting back to around 573, 75, somewhere around there. It does correspond with this. Let's see, what is this level here? That looks like it's the 382 retracement from this Fibonacci here. That would be 574, right around there. And then if I do, let's see, look at, there's another 100% level. That looks like it was the low from over here. January 13th, it's around 575. And then also, the downtrending parallel channel in light blue there, and that downtrending yellow line acted as resistance here, acted as support over here when we had the DeepSeek news, the beginning of the tariff/trade wars, gap downs over those weekends, but then we did break higher. So yeah, we could be heading back to that level around 375. If I do real quick, just flip over to the 10-minute time frame, we can see that the SPY did, let's see, I was talking about this with the UVIX, with the UVIX over here, we saw a red candle. With the SPY, we see this nice green candle at the start of the trading for the week. Market open on Monday, pulled back a little bit, but then moved higher, pulled back some into the close on Monday. After hours, held those gains from the day before it looks like gapping down into the pre-market on the 18th. And then, opened, gapping down, closing or opening lower, and then moving lower, holding the lows for that day into the after hours. But then it looks like, let's see, where is it at? It just it didn't really gap up into the pre-markets, but we are now going higher around $562.47, or 50 cents. And then if we do consider, let's see what we're seeing here. So yeah, volume's been coming down as price has been coming down. So that does suggest that, selling might be subsiding. And then we have this moves up here, volume still coming down. And then let's see, we did have an increase in volume between Monday and Tuesday. So Monday, we had a volume of around 49 million shares traded versus about 66 million shares traded yesterday. And so that does suggest that we could be seeing a little bit of a sell-off, maybe people just being a little bit antsy before Jay Powell speaks this afternoon. But like I said, I think that this could be heading up to around 575, maybe by the end of the week. So do keep that in mind. And let's see. No divergence here in the RSI that stands out to me super clearly or anything. Nothing like that. And let's see. MACD still red, still negative. And that might be, taking a couple of days before it does flip green. So do keep that in mind. Then just real quick, looking over at the SPX, which is the S&P 500 the S&P 500 index. This closed yesterday at $5,614.66, being down about 8% on the day. No pre-market or after-hours trading with this one, but what you can clearly see is that we did put in, a little bit of a top there, right around $5,667, which does correspond with the tops over here, kind of a double top there. So as that was prior resistance, did act as support over here before starting to go higher with higher lows. Does look like we got rejected from that level, so might see a little bit of a pullback before we start to get higher. And so that confluence of levels up here that I was talking about with the SPY for the SPX, that's going to be getting to around $5,773 or so. So let's see if we can get there by the end of this week. And then real quick, going to be looking at Bitcoin, still, hanging out right around this yellow downtrending line over here. Currently trading around $83,500. It's kind of been hanging out there, in all honesty, the past 5 days or so, or more than that, the past week. We do have this purple line here at 83,000. And so what I was looking for, as you do see here, this red line that is solid around 84,600. That was the CME gap from last weekend. And as you can see, based on the trading from Monday, we do have a wick up to that level. So that gap has been filled. But the CME gap from a couple weekends ago, see that red dashed line there around $86,000 to $87,000. I was expecting that to be filled a couple Wednesdays ago. So that would be, like a week ago. And that has not happened. And actually what I did before, starting this video, but just after waking up this morning, because of the FOMC, because of Jay Powell speaking, I don't really know what's going to be happening with Bitcoin. I did do kind of just a weekend experimental trade over here where I picked up $20 worth of Bitcoin and was planning on selling for more than I believe 5% gain at around 86,000. Got that alert there, but I decided to sell this morning. I took, about I think maybe a 3 to 4% profit. So nothing too crazy. From $20, I think I made 72 cents. So nothing crazy at all there, but that was really just kind of an experiment with the CME gap over the weekend. I will be doing that experiment again in the future, probably putting more than $20 on it. I think that was a nice way to make a little bit of money and to see if the CME gap filled. I should have probably just sold at the start of last weekend, and then I could have repeated, when it came down to around 82,000 over last weekend. But yeah, let's see. I wonder if this could be breaking down. It does look like we put in lower lows over here, so maybe that's a little discouraging. But with that being said, we do have higher lows in the RSI, and so that is bullish divergence. So we will see. If it does come down to like 75 or 72,000, I am prepared to dip by a little bit more aggressively down there. And of course, if it does come down to 69,420, or even, if both of these limit orders that I have, just $10, nothing crazy. If those get filled, then I will, just probably more aggressively buy when we are in the shaded box, because I think that by the end of the year, whether that's between now and the end of the year or at the end of the year, basically between May and December, the end of December, I think that Bitcoin will be back at all-time highs. So even if that's just for a swing, I think that's a pretty nice trade. But anyways, let's quickly look over at Ethereum, which I did cover on Monday. I believe I drew this line up there based on the weekly, going back to the low from March 13th of 2020. And then we got this bounce over here. from June 17th. And I should note that this is on the linear scale, so not the log scale, but it does look very nice that we are, bouncing, respecting that white uptrend. Did get a wick below it last week, but this week we are currently trading above it. Switching over to the daily, very nice bounce there. However, this does look like it might be a bear flag. And so what I've been doing with Ethereum is I've upped my $5 DCA to around $10 DCA. And if this does go lower, if this does come down to around 1,000, I'll just add even more aggressively down there. This is one that, I think that a lot of people have been bashing, a lot of people have not been too impressed with, but even just from current levels around $1,900, we can take a measurement from current price up to these prior highs from earlier from last year, I should say. That's over 100% move to the upside, so more than a 2x. And if we do head to 6,000, 8,000, something around there, that's potential for 3 to 4x. So I am really just liking Ethereum for just a very casual, slow accumulation. I do think that this will be a good performer by the end of the year, but it might be boring in the meantime, and that's fine. I am cool with that. But then let's see, the next one on the list is going to be ticker symbol URA, which is the Global X Uranium ETF, which closed yesterday on the 18th at a price of $24.45, being down about 0.77% on the day, hanging out right around that 786 there at 24.51. And so that 786 is based on this retracement here. And, I believe I talked about it in yesterday's muted video, was this downtrending parallel channel. I think that what we could see is the base of that start to act as resistance. And so that would be right around like 25.50, maybe, $26 from current price. Getting up to there would be, around a 4.5% move to the upside. But if we do move past that, maybe get this little bounce thing that I've got drawn over here, we do head up to fill this gap. That's around a 25% move to the upside from current price. So looking pretty good there. And so for me personally, I don't have any URA, but I did pick up some shares, not many, of Oklo, ticker symbol OKLO. And so, I feel like feeling bullish about uranium as far as building up the U.S.'s energy infrastructure. Uranium, nuclear, definitely going to be an important part of that, especially when pivoting more into a green or more renewable energy portfolio. I think that uranium, I think that nuclear is going to be very important for that, especially with stuff like Bitcoin, AI data centers, quantum computing. There is going to be a lot of energy needed for that. And so I think that nuclear energy, uranium, will be performing well. And so even if it's just for a swing trade, 20%, let's say, to the upside to fill that gap, I think that's a pretty nice trade. And then just, I believe I had mentioned this a couple of days ago, but we do have the lower lows here in the stock price corresponding with higher lows in the RSI, and that is bullish divergence. So I think that this could potentially be looking pretty good in the weeks to months ahead. But I'll be following up on that tomorrow morning. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, and have a great day trading Wednesday at the end of the FOMC, and Jerome Powell speaking this afternoon. Take care, you guys.